Hey everybody. Good morning. And welcome to the stream. So, big day, I guess. I guess it's all relative. Big day. I mean, you got part of the Mama Nat. You got Microsoft and Alphabet reporting earnings today. You got AMD jumping in the bandwagon. They're not in the Magnificent Seven, but if you haven't been paying attention, they've been a monster ripper. They're chasing on NVIDIA's heels, I guess. You know, it's kind of funny. The development hardware, all these, everybody talks about NVIDIA GPUs. They develop that hardware, and they develop on these AI models on that hardware, and then I gotta mute my phone there. Then AMD goes in and undercuts NVIDIA on these deals to make the actual hardware that these models are gonna run on, the OEM hardware. Like AMD gets in and makes the processors for all the game systems, all the, they get in and make that OEM hardware that these models are going to run on the consumer products. Now it's not universal, but they do that a lot. So it's kind of interesting, I think, that you develop on the NVIDIA GPUs, then you flip over and use the others. So FOMC meeting starting today. What's Powell gonna do? I think they might soften up on their rate cut language. It might freak the market out a little bit, because so big picture, step back. What happened yesterday? Why did it all of a sudden take off at 2 p.m. or what was it, 1:30, 2 p.m. yesterday? We started skyrocketing higher. Anybody know what came out? What kind of news? It was the Treasury put out a report, an interest report, how much they expected to pay in interest for Q1 versus Q2. Q2 was, say, 40% less interest than Q1. Yeah, they were estimating they were going to pay almost $800 billion in interest, I think it was, in Q1, and then only about $450 billion in Q2, maybe 470, something like that. I was just like, what the fudge? Anyway, they're not going to be able to, it's not like they can just refinance the debt that fast and take away these interest payments. It's just, I don't know. It's ridiculous. And but the market was like, oh, that means the rate cuts are coming. That's like a confirmation. Rate cuts aren't good for the stock market. I'm telling you. Maybe good for the economy, possibly way down the road, but it's not good for the stock market. When they start cutting rates, that means something's wrong. Something's wrong. I'm just telling you. We start cutting rates. I mean, we've seen it in the past. We can flip over and look at it here. Let me pop it up. Kind of ended the show with this yesterday. Right here. Every time we start cutting rates, something bad happens. I mean, it's not just been once or twice in the past. So I don't think they just magically save the world and can cut some rates and no big deal. Something's up if we start cutting rates. So it's not going to be a good sign for the stock market. I'm telling you, I don't care what the mainstream media narrative is. You can say I'm wrong. History, modern history. This is so you're like, but back here it was different. How many traders are still trading from back here? Not very many. I started trading up here. I mean, you got a few that older than me that remember this stuff. Were you trading back then? Or, did you even pay attention back then? Most of the traders have picked up in the modern times, and we're talking about big problem, big problem, big problem. And then what are we doing right now? Now, this is DGS2, 2-year constant maturity rate versus the Fed funds rate. The orange line is the Fed funds rate. If you're unfamiliar, you haven't been here, you haven't seen this chart before. So Fed funds chases the 2-year constant maturity rate. If you didn't know that the market sets the rate and the Fed chases it. If you're oblivious to this fact and you think the Fed sets the rate, welcome to the party. They chase the 2-year. They chase it every time. They chase it up. They chase it down. They chase it up. They chase it down. They chase it up. They chase it down. And they're above it right now. We typically don't hold longer than about 5 to 6 months before when these two cross. When the orange gets above the blue, we don't hold longer than 5 or 6 months, typically, evidenced by here, here, here. We don't usually go longer than about 6 months before some sort of freak out and we got to start cutting rates, and it's not good for the market. I'm just throwing it out there. So FOMC tomorrow. I'm kind of like, why does JT got this drawn over here? We might have to raise rates more. That GDP getting hot. That PCE coming in hot. Consumer data coming in hot. You know, all that. What's happening? The government's spending a bunch of money. You know what causes inflation? The government's spending a bunch of money. We've been in like 6 to 8 quarters of actual you and me type business in GDP decline. Now it's the official GDP numbers have the government spending included. You can't just separate that out. But you know, some smart people have looked at their data who've tried to separate it out, and it shows that the regular commercial output, you know, the stuff that we do as business, not the government, has been in decline for 6 to 8 quarters in a row. And, you know, back here, for those of you that were paying attention, I put videos on YouTube back in 2022 that got deeply suppressed about how we were doing the recession. And they kept raising rates. And we haven't really gotten back out of that as far as the real economy goes. But they keep increasing that government spending portion of it and making and you know, plastering over the real story. If we didn't have that umpteen $1 trillion of government spending, would the GDP be positive? Probably not. What does government spending do? That just takes money from the public and spends it for no real benefit to everyone. Right. Anyway, I digress. So what are they doing tomorrow? I don't know. I expect some softer language on rate cuts. So disclaimer, all trading involves a substantial risk of loss. Don't trade if you're scared to lose money, or if you think you might, or you need the money. Past performance. What I predict, not necessarily indicative of future results. I may never get another one of these right again. Hey, Chris. Good morning, everybody. And this presentation is intended to be informational, educational, fun, and entertaining. It's not a recommendation to buy or sell anything. Anything at all. No stuff from gurus. Don't buy stuff. Don't buy stocks. Don't buy options. Don't buy futures. Don't buy Forex. Don't buy cryptos. Don't buy bonds. Don't long them. Don't short them. Don't trade them. Because it all involves a substantial risk of loss. And if you desire personal financial advice, hire and consult a financial advisor. Has a fiduciary duty to give you advice based on your financial situation. At least in the United States, that's true. Just be careful out there. You know, financial advisors, it's been my experience. Nobody cares about your money more than you do. I've yet to meet somebody that cared more about your money than you do in reality. Most people just care about how to make your money some of their money, or some of your money their money. I think about it. That's what I'd say most people out there, you know, Scouts Honor, I'm here to try to help people not get taken advantage of in that situation. But it's kind of true universally. Laura was writing in Discord yesterday. I don't know if she's on the stream, but she was talking about the fact that her financial advisor, or the people managing her funds, lost her 40% of her retirement, and then she took over and started following me. and was doing substantially better, like ridiculously substantially better. So I'm not trying to brag on me. I'm just, that's her experience. It's been several people's experience. I think Goose, similar. Well, he didn't hire other people, but he had a similar experience last year. I'm just saying, like, follow somebody you trust. So coming up tomorrow, we have this FOMC meeting at 2 p.m. That's the big show. And then 2:30, we got Jerome Powell speaking right there. He cannot resist speaking. It used to be back in the Yellen days and the Greenspan days, they would only speak every other meeting. But ever since Powell took over, every single meeting, he's got to get up there and do a press conference. So, I mean, is that like megalomania behavior? Kinda. Anyway. Then, coming up on Thursday, unemployment claims. And, I mean, the bigger news of the whole week, really. Grab this, pull it over. Is that the right one? No, it is not. Find the right one. I gotta go back to Discord and grab it. Cool. All right, pin messages, and thought I had this up. Sorry. For the delay. Here we are. So we've got UPS in the toilet today, and FedEx going along with them. And there's a joke around here. We had that big snowstorm. I didn't even make it to my office for like 11 days. UPS hadn't been delivering packages. Like, I've got stuff that came into Knoxville over a week ago. Now, Rongamer's got stuff been here for more than a week that hadn't been delivered yet. It's just been sitting at the big warehouse out off 75. And the joke on social media around town is UPS even still in business? I haven't seen a delivery truck in at least a week, if not 2 weeks. Rongamer was pulling up his Ring last night, looking at his Ring camera, trying to see if he'd seen a UPS truck pass through his neighborhood. I mean, I don't know. They need to get their crap together. Get some packages out. Now, we have Microsoft, AMD, Alphabet, Starbucks, Skyworks, Juniper, Lending Club, Electronic Arts, all coming in after the close today. So we can talk about those during 30 minutes. Awesome. We've got Boeing, Nora Nordisk, Qualcomm, Align, Altria, Royal Caribbean, Peloton, and then Thursday, the reason I jumped over here, we've got Apple, Amazon, Meta. So we've got most of the Mama Nat, that Magnificent Seven, coming on in here this week. And we already had Netflix is not part of the Mama Nat, but arguably they were part of the FANG, and I just kind of throw them in there as like part of the Magnificent Eight. Anyway, we already had Netflix and Tesla throwing down, and Netflix popping up, Tesla going down, hopefully finding the bottom, finally, maybe. And we can talk about some of these other ones, Microsoft and Alphabet and AMD, Apple, Amazon, Meta. We'll talk about them more, a little bit this morning, and especially these three over here. We'll talk about the rest of these this evening. So 30 minutes of awesome coming up at 5 p.m. If you want even more of JT today, I have a show at 3 p.m. also. And let me grab the link for that. I threw it in the chat yesterday. I'll have to pin it to the chat or pin it to the channel afterward. But let me grab this link. So if you want to come register for that 3 p.m. show, where I'm going to talk about how I have won 72 trades in a row with one system. Yeah, you heard that right. 100% win rate. 72 trades in a row. If you want to hear more about that, right here's the link. Come register for that event. I'm not doing it on YouTube. It's not YouTube type content. So, and that there will be an offer to come join me for the next 28 trades, at least. I'm going to try to hit 100-0 win rate with one particular trade. So if that's something that interests you, come check it out. It's not like covered calls. It's something unique, something different. And hey, Kimberly's here. Hope you're feeling better, my dear. And good morning, everybody. Kind of skipped the good mornings. Been hyped up here. All right. Moving on. Let's pitter patter, let's get at her. So the thing yesterday, I was talking about look at that square or block, whatever, and the market's open. I did a 15-minute monologue. Good grief. Anyway, that thing I was talking about yesterday where the weekly thing, I think I found it here. I think I called it weekly up count. Imagine that. It's like a logical thing to call it, right? And there we go. So we've got 12 weeks of the last 13 that have been up. 12 out of the last 13. Now, how far back do we have to go to find another instance of that? We go back. Nope, not right there. Keep on going. Right here. 1985. Right there. So right there was the prior instance of this. And then before that, we had some instances here in the 70s, some in the 60s, and then it was pretty commonplace back here in the 50s. We did that quite a bit. So we haven't really had 12 green weeks out of 13. And we've not had 13 green weeks in a row. All the way back to the 50s. So, and we're not going to get it right now because, well, we got that red week in there. There was that one little red week. That one little guy. That one little. We had that one little pullback right there at the beginning of January. Wrecked the streak. Could have done something we haven't ever done. But alas, we didn't. So right there. Right there it is. Crazy, right? Crazy. So it's just wild to me. Doing something we haven't done in that many years. Oh, look at that. Beto crossing 2099. If you're in Crypto Unleashed, it might be a good time to consider taking some profit. So there you go. And as for the indicator I wrote, if you want to see the code, why don't we just jump into some code real quick? It's fairly simple. You just write this out. You look at the close greater than the open, close greater than the open for 13 weeks. And then you come down here. I actually checked it for out to 15 weeks. You say, if the count's greater than 11, throw it on the chart, which means 12 or more. And there's the label. That's as easy. That's as difficult and as easy as an indicator can be right there on TradingView. Anyway, moving on. S5FI still hanging out below 80. We're going to pop it again. Maybe. Might pop up. But I bet we don't make a higher high. This one coming back up strong. We may get back up to the top. We see a lot of chop in this stocks above the 20-day. We do tend to see a lot of chop on that one. So we may poke out the top again on this one before we oscillate down further toward the bottom. But this one right here, typically, we only make a second little attempt before we go rocking the other way. That's true here. True over here, true over here. We did come back and then all the way down. So be careful. We're getting fully cooked on the upside here. And maybe in for a bigger downtrend. And market has this habit getting everybody super bullish. Like, oh, the party's never going to stop. Think about it. Think about the way the mainstream media is talking. Oh, we're going to go up. AI, this, that, and the other. And we're going to cut it down to the AI 5 instead of the Magnificent 7, this, that, even more stuff. And then, just think about October. We were all talking about this Black Monday, biggest, crash potential, whatever. so quickly we forget where we were just in October. Now here we are talking about the crazy. We're never gonna get a pullback again. VIX is dead. Watch out. We're going to get this pullback. It's going to happen. Whether it's on the FOMC tomorrow at 2 p.m. If the FOMC sets the stage, if they get more hawkish, if you will, on these rate cuts, and they kind of put the kibosh on it a little bit, we could see pretty epically bad reaction out of like Apple and Amazon and all those ones that are floating up there at the all-time highs, right close, right near. I would be very careful. I'm not really invested short. I'm not really invested much long. I'm just kind of floating, just taking advantage. I'm doing a lot of theta burn type trades where the more we kind of churn sideways, the more profit I get right now. So ES might push on higher. That 49.60 level, not very far away from that last pullback. See what we get to. In Q, hit the 1618 in that last pullback. And right there, just hanging. Haven't been able to break out substantially. Could we push higher? It's always possible. This thing's been on a monster run. I'm just saying, be careful. Russell still finding resistance, breaking through that 618 level. Is Russell going to be the canary in the coal mine? We may be in for the bigger drop. May take us down into this 1800 area. Possibly down in the 1770, 1780 area. Definitely be careful. And oil. Probably going to get a little deeper retrace here before we can bounce and go higher. That would be my guesstimation. Now, this was only a 3 waves up, so this is maybe we need to squeak out one more little higher high here. We've definitely pushed the limits to the downside, so we may see a little squeak higher before we get that deeper retrace. And that squeak higher could take us up to 83. That would be the most ideal spot to go up to. From right here where we are, maybe consolidate another couple days, then pop that right there. This was kind of a longer consolidation, so maybe we just do the little short thing and get that little extension up to 83, then get this deeper pullback right back where we are. This would be the most ideal situation. This would be the point where you want to load up right here if we held that and turned back higher. Right here. Turning back higher. That's the potential. That's the potential to go up to 100, 150. So we still got a little work to do if we're going to do that. If we start breaking down here, we get below this consolidation over here. We're going on lower, probably down in the 50s on oil. 50s oil would be good for Biden. $150 oil probably means Trump was going to win, but I don't know. We'll see. A conflict in the Middle East brewing. If you've been unaware, General Rush pointed it out yesterday in Discord. Had some KIAs killed in action, and the response may be fierce. So we'll see what happens there. Gold pushing a little higher this morning. Still kind of expect this to go lower, but if we do break out above this high right here, above this high, if we actually break out above it, odds are we're probably going on up. So stay on your toes on that one. My expectation would be for lower, but price is never wrong. Price is price. Price is the only truth in the market. If price is going higher, hey, it's not being wrong that costs you the money. It's staying wrong. Don't stay wrong. I've been reading an interesting book. I'll share more details with you later. It was written in the early 1900s, and a lot of the stuff I say is in there. It's kind of crazy. A lot of these lessons I've learned over the years, yeah, right there in the book, and it just as I read it, it just makes me laugh. I'm like, I I say these things. These are the experiences that I'm sharing with people like you right now, and these are the things I've learned over the last 20 years. And he's got them right there in the book, from 100 years ago. And it just makes me laugh that the lessons of the market are the lessons of the market, and sometimes they're hard to learn. Bitcoin keeping pushing higher. Watch for that resistance. We're getting up into the resistance zone. It may be smart to book some profit on that crypto unleashed. So be careful. Ethereum, nice little coming along for the ride. Still well below that uptrend line of the lows, just like Bitcoin. Dollar, still finding resistance. If we turn, I kind of expect a pop up here, but if we don't, we're probably going down into the 90s, if not 94 area. And what's moving today? SMCI getting a nice little pop. One of these little pops is going to be the end. If you got this one, I'd be booking profit. That's getting wicked exponential. Please, for the love of your money, be careful. This is not going to end well. MSCI, I'm thinking possibly people are getting that one confused with SMCI, MSCI. It's getting a ridiculous pop. Did have earnings, beating on the top, beating on the bottom, beating pretty heftily on the top. And, well, right up into the 1272. 624 would be the next level of resistance above this right now. FFIV, look at that one go. Seeing a lot of this. So, Cuppy, he's a newsletter writer. He put out this thing. He was talking to a fund manager having lunch, and if you want to see this, you can just. It was on Zero Hedge. It was on the CEO of my company posted it in our Slack and the newsletter itself. And he was talking to a fund manager, and he's like, "Oh, I'm getting killed on NVIDIA, and I'm underweight, and I need to add more NVIDIA. I've got my performance is just lagging, and I can't lag." And you look at NVIDIA, and it's doing this blow off top situation. And my ultimate target was right up here. Once we get to this area, though, you know what's likely to happen? All the way back down, correcting very hugely. We're seeing all these ones do these exponential crazy moves. These wicked pops without even getting, little baby pullback. Look at this pullback. We're likely to do that again. And this thing made its low in 23. So it's hurrying to catch back up with the rest of the market, but it's not going to end well. I'm just telling you, be careful, protect, make sure you got your stop, make sure you know where you're wrong. HCA, that one's ripping it back higher. I'm about to hit the 1272 target up there from way back when. Came up shy back here, did a deep retrace. Could go for an extension even. Look at that. Right there, then 327, 356, SANM. Whew. That was a wicked pullback. Look at that. Went exponential and went into a consolidation for over a year. Now pop it again, possibly 76 on the upside. Tesla working on coming back a bit. Has resistance at the top of that gap fill. Looks like we opened high, retracing it back down. We may fill the gap down and then work on getting on up here back to 207. It's a long way back up here to the roadmap line. And then we have the downtrend line. And then we can make some upside progress. But that's a lot of layers of resistance. Tesla's got to prove this thing is going higher for me. I am long a couple shares, and I'm willing to bail on them very quickly. There's the potential we go on down to this 150 area down here. But it's probably not going to be without, every time we drop, we tend to retrace it for a little while here. At least. Then we make some drops and then we retrace it. Be careful. Your money. Nobody's watching out for it but you. I'm telling you. Even if you got a financial advisor, a manager, whatever, nobody cares about it more than you do. I will guarantee you. MPC trying to break out. Not too bad. Not too bad. Finally getting that 1618 from this bigger correction it did back here. This smaller correction, well, shallower, took longer. Maybe 164, 170 would be the resistance on the upside here. And some people try to recreate my charts, and I do this kind of sloppy on when I do the YouTube show. I'm kind of going fast and sloppy instead of sitting here. I sit in my zone with my screens and I have a whole desk set up where I trade, and I do this more carefully. So if you have questions about what I'm doing on YouTube here, ask me in Discord. I can redo some numbers and tighten things up just a little bit. On the YouTube show, I do go fast and kind of a little bit sloppy. I don't always hit the exact highs and lows. That one, that's a heck of a move right there for GM. But look at the bigger correction here. They're stuck. They're going to be stuck in this resistance here. And I have to zoom this up so I can pull it over. This is going to be you see where we topped out, we topped out, we topped out, we topped out. That's going to be a major resistance point to get through for General Motors here. They're going to have to work through that. If we turn down again, it might make a lower low. That was the lowest low we're coming up off of. If we hit that again, it could very well make a lower low. THC, well, following the big blue arrow, 94, 99, 106, 111 potential upsides, but eventually we're going to get a retrace sometime out here. Spot, right on up, chugging right on up. Breaking the next resistance point. We do have a nice resistance right there. It may take it a little while, kind of like the way Netflix had trouble getting up through their gap fill. This one could find some resistance at this zone here. We had some buying and selling fighting right here. And I guarantee you there's people that have been in it, stuck in it since over here, and maybe looking to get out, just break even. FLUT. Not enough candles to do anything with. That looks wild. CLS, upside resistance, probably at 36. SQ. Fired off my alert because it made a move up through above this high. That's like the most aggressive consider entering point right there. More conservative is my next alert right up here. That's where I may actually add at this point, or may get back in. I had shares that got called away on this last run. I had $85 calls sold against them, and somebody called my calls for 85, even though it never went there. So you think about, this is why I always say, you have to be 100% okay with selling your shares if you sell calls against them, because somebody called my shares at 85 and price never went there. It's an extremely rare event, but somebody did it. So just because your call is out of the money doesn't guarantee you anything that you're not going to sell those shares. If you want to hold the shares and you don't want to sell them, don't sell a call against them under any circumstances. I'm just saying. Just saying. ASML, right up in the resistance. 901 next level up. I sold out at 820. Beautiful trade. Beautiful trade. ATGE. Hey, Laura, I was talking about you earlier. Nothing bad. ATGE, right back to the roadmap line. This is the kind of thing that can happen here. Once we get to extensions, you know, FTX had the example right there, right to the 1272, and right back to the roadmap line. We even saw that on Walmart too. Up to the 1272 from this move right here. This little pullback, rump out to the 1272, and right back down. Now we're working it here, working on getting higher. So we saw UPS getting a smackdown this morning, right back to the 618. Somebody drew a big oval target on the chart. Not naming any names, but if we get below this down here, 125 right there, and I'd be careful. We could extend down to 125 on UPS. Definitely be careful. Looks like ATGE, VRTX, Biotech Pharma, CalX. Look at that. Back down to the lows. Be careful on these things. I don't even see the roadmap line. Where's that thing? Still count. There it is. Bounced right off the roadmap line and lower low. So downside target on this one. Like 29. Netflix. Wow. All the way up to 571. I bailed at 550. That was a pretty sweet trade for me. Got in at 400, out at 550 on shares, or a share. 663, 712. Seems like that one's trying to catch back up. It went up on rates, so be careful. You going up on rates and you start losing customers. It's like a delicate balance, you know. You increase prices to make more money. I mean, that's inflation too, right? Go look at the rate. Go look at the prices of a next Netflix subscription. How much it's increased? That's no 3% a year. Whirlpool hanging out the bottom, right in the target. Just get lucky again. I mean, just get lucky on that one. Sometimes I get it right. PII, Polaris. Is that the recreational vehicles? Support right here. Let's see. A, B, C. Yeah. I would expect this to pop right down in here before it finds a bottom. PDD. Somebody was like, somebody in Discord yesterday. Why is PDD pulling back? Maybe because I put a big blue arrow in the chart. I don't know. I'm just being facetious here. It needed to go revisit the roadmap line. It's not news. It's just the chart. I'm telling you, that's part of the book I'm reading, all the way back from the early 1900s. It's not news. It's the chart. And the chart a lot of times tells you things that are going to happen. It's funny enough. He talks about like earthquakes and things that showed up in the chart before they happened. That's the kind of thing I talk about. Sledge is here. You know, we've been joking about the Boeing door flying off. Like the chart tells you things are going to happen. Like how do we know ahead of time? But then he brings it full circle. He's like, really, we react negatively to negative news when the chart's already set up negative. And we ignore negative news when the chart's set up bullish. So, I don't know. SLB, right there, looks like. And then bullish news exacerbates bullish moves on bullish charts. So, SLB, that looks pretty Pretty gnarly. Maybe going for an extension. Right down there. It's an interesting philosophy. You know, this was written before, this book that I'm reading right now was written before Elliott Wave and was a thing. So this psychology of the market has existed for a long time. It's just people. Yeah, it's Reminiscences of a Stock Operator. That's the book. I was going to share it later after I actually get through the whole book. It'll probably be a few more days. Val looks bearish. FedEx looks like we could go on down. It's just sympathy of UPS today, but hanging out. This is like a megaphone pattern, opposite of the watermelon seed squeeze, but equally as unreliable. Kind of expanding triangle is what they would call that in Elliott Wave speak. And that would be the A. This is like a B, and we could see a C wave that goes lower. So anyway, I don't have a book list. I've only read like, ask Kimberly. I don't read books very often at all. The book I read before this one, probably Sell Like Crazy, is what it's called. Book before that was probably Superfans. Book before that is probably the YouTube Formula. I tend to read books that give me information more than I do books about stories. NetEase looks like 3-wave correction up into some resistance, and we may be headed lower. REVB. Biotech, biopharma, medtech, and reverse split. Yep, that's the recipe for a dumpster fire. That one looks like that's just bad. Look, repeatedly reverse splitting. My gosh, man, that's a. This one's going to come down to the roadmap line eventually. You know, we do have upside resistance way up there. We're going to touch again. We're going to do something like this somewhere up here, and we may be doing it now until the roadmap line catches up. So we may churn in this zone till we get there. It could just pop, but likely to churn or get a deeper pullback. DWC. I'm thinking we're coming back down to 20. I bet we get 20 before we get 200. I bet we get 20 before we get 150. I bet we get 20 before we get 120. Halliburton, just kind of like this, just turning sideways. Nothing exciting here. I wouldn't trade it. So Microsoft. It would not surprise me to get a negative reaction. Now, we may get a blow off top and then our negative reaction. I am not as sure on Microsoft as I was on Tesla and Netflix at this point. I just want to throw that out there. That's getting ridiculous, and ridiculous can keep being ridiculous. I want to throw that out there, that irrationality can feed on itself and create even more irrationality. So we could see this go up here before it comes back down. It's likely to come back down. Just does it go ridiculously higher first? Same thing I was kind of talking about on, you know, those Bitcoin spot ETFs. Like if excitement got crazy, ramped up, and we kept feeding on itself, like there was the possibility we made a new all-time high on Bitcoin, but it just didn't work out. There were too many people that were ready to sell the news, and that's what happened. Google finally breaking out to a new high. Again, same as Microsoft. If we can keep this party going, we could see some ridiculous levels up here, but odds are they're going to disappoint on earnings. We're going to come back to the roadmap line on both Microsoft and Google. AMD also. Did they grow earnings that much? Did they grow sales that much? I doubt it. Could they go on up here? Could they pop the extensions? Sure. I mean, that big pullback right there on this monthly time frame kind of indicates we may see 193, 231. I mean, that's where you look at this giant pullback we did from here to here. We popped right on through. 431 could be where we're headed. We slowed down. Look, we slowed down at the 1272. Consolidated just a little bit and then heading on up. I digress. We'll talk about it more after the close. It is 30 minutes of awesome. So bias for the day, probably gonna stack some more irrationality on this thing right up through 2 p.m. tomorrow. So be careful. Be careful. If you want to come see me at 3 p.m., I'm going to talk about how I've won 72 trades in a row. Here's the link right here in the chat. And hopefully I'll get 28 more in a row without taking a single loss. That'll be pretty sweet. And anyway, come join me there. 5 p.m. If you just want to come back for free content, 5 p.m., come see me right here on YouTube. 30 minutes of awesome. Your requests, at least 30 minutes, probably an hour. I think we went almost an hour and a half last week. And I'll be here. Same bat time, same bat channel, as always, for 30 minutes of awesome. And otherwise, I'll see you tomorrow morning. Make sure you subscribe. Make sure you give me a like if anything I said was beneficial. And I'll see you again tomorrow. Bye for now, everybody.